I think the year ends a little higher from here. 10% plus or minus, call it an 8 to 12% kind of target by the end of the year. We don't explicitly project returns, but looking at the economy and looking at corporate performance, looking at the interest rate environment, we think that's all supportive and constructive of some grinding forward of the market over the course of the year, albeit with some volatility here and there as events take place. In the middle of earnings season is a very good example of that. Probably the biggest uncertainty is trade, and we've everybody's been talking about that incessantly over the course of the last few months for a good reason. A trade war is something that there may be some that lose less, but nobody really wins in a trade war. And if there is an extensive or extended trade war, we think ultimately that can be a material negative for the global economy, U.S. economy, and for the U.S. markets, Art, regardless of how the administration spins.
Art, can you indulge me? Let's say the economy proceeds as you predict it will for the rest of the year. That's what you're building your stock forecasts on right now. But the Fed doesn't raise as quickly. Is that a good thing or a bad thing for the markets?
Well, if the economy proceeds as we think it probably will for the balance of this year, I think the Fed will. So I think it's hard to answer that question. But let's make that assumption that the Fed goes one more time and it happens in September, but then they take a pass on December. I think the market is priced in for this year, so that's probably something that we look at as a positive. What would that actually do? We'd probably see a broadening out of the 2s-10 spread, because I think the 2s are so high because we're pricing in 4 rate hikes this year, and I think that the 10s would naturally drift higher over the course of events. So we'd probably get some relief in the flattening yield curve. And that would be a market positive. But to the extent that if the the economy continues the way it is, we're probably going to get 4 rate hikes this year, and that's probably okay.
Jordan, what should I sell?
Well, we're concerned about utilities, concerned about REITs, the interest rate environment, and we think that the 10-year yield does edge up over the course of the year. We think that those are going to be areas that struggle. And so we would avoid those. I can't say that any particular entity in there is going to be an issue, but there are definitely areas that we like a lot more than those, and that's where we focus money, particularly financials and industrials in the second half.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.